Hey,
Hello.
Brenya. Hello. How are you?
I'm very well. How are you?
All right. I think we're both quite nervous about today's podcast
Yeah.
because
Because although we like to think we know what we're talking about, this is the one that trips us up.
and I
Mm.
wanted to do it because it is something that comes up in my business every now and then, and I always have to Google it. So,
Yeah.
it's good for us and it's good for you. And
I think also as creatives, it's something we never want to do,
no,
but it's,
ever.
yeah. Can
So,
you guess what we're talking about today?
financial and business jargon understood. Du- 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 du.
Yeah.
So I'm going to go leap straight in. I've
Yeah,
written a
because
lot of
you've got very
notes.
prepared over this, haven't you? You've been,
Well, as prepared as I can. I do apologise now if we cover a subject and we are not quite right, because we have tried really hard to make sure that we're giving you factual information, but there
yeah.
are some grey areas. And then, but let's just get
And to be
started.
honest, if there's grey areas, talk to an accountant.
Yeah.
At the end of the day, we're not experts on this.
Yeah.
You're not, unless you're an accountant, you're not experts on this. Please talk to an
Yeah.
accountant if you have any worries.
I'm just going to put my phone on silent, which I'd forgotten to do. Do
But I was
not
just, so I was
disturb.
just telling Sammy that I have a business degree, and in the first year you have to cover, or you have to pass all the modules. You have to cover everything, and that includes everything from accounting, law, marketing, economics. I did accounting. I had to pass with 44%. I passed with 45%. That's how good I am at this.
Yes. Oh, you passed. A
Yeah, I
pass is
passed.
a pass. Right.
Wasn't flying colours. It was a pass. It was fine.
Yeah.
Right, go on then.
Okay, so I'm going to be reading a lot from my notes today, so I'm
Yeah.
sorry if I stumble. I have practiced. So you have a company, and naturally you want to find out how you are doing financially. How do you do this? There are so many different terms, jargon, and terminology out there that understanding it can be a minefield. So I wanted to do a podcast, today's podcast, can't get my words out, about understanding the meaning of these phrases, as there are so many. And it's helpful to understand what some of the most used mean, because we all struggle.
So there are some that we won't be talking about today,
Yeah,
but we don't think that applies to us as our little businesses anyway.
yeah. And I, for some of my research, I've used my favorite software, Bake Diary, which is a cake pricing and order management software, primarily for cake decorators and home bakers. And I love it. It suits me fine. And I've gone into the reports and lists and used their terminology and followed it, because I figured if they're using it, that's
Yeah.
that's what we're all going to be using,
Yeah.
type scenario. So the first one that we're going to talk about is income statement. Okay, I'm going to say what I've got.
Go on then.
The income statement reveals information about your company's profitability and financial situation during a specific time period. But the income statement kind of covers all of, like, the income, revenue, cost of sales, gross profit. So it's like your file is labeled income statement, and you're going to open it up to get all your little smaller
Yeah.
files for
See,
the
when I was doing accounting, I think this is what they called the balance sheet and the profit and loss, because that's
yeah.
got a bit of everything on it.
Mhm.
I still don't understand profit and loss. I still don't understand a balance sheet because it has to balance. I could never get it to balance. But it's, that's fine. But yeah, it's basically all the financial shit about your business that you need to
Yeah.
know is
Yeah.
in that document.
Yeah.
There are some accounting programs out there as well. I know I used to use not Xero, one of the other ones. QuickBooks. I used to use QuickBooks,
Yeah.
and that would
I do it for you, wouldn't it?
it produces all this
Yeah.
stuff
Which is
as long as you
it's
keep
Fake
putting everything
Diary.
in.
Yeah,
Yeah,
on a regular basis. Because
yeah,
Fake Diary does that. And I used to use cash flow.
Yes.
which is the same sort of thing
Yeah.
as well. And I did really like it until I found Bake Diary, and I was like, oh, I am converted.
Made for you.
Yeah,
Yeah. So this
definitely.
is, if you have any of those things and it says income statement, profit loss, balance sheet, all those sort of things, it's all your financial stuff that you need to know is in there.
Yeah, as part of your income statement.
Yeah.
So the next section would be your income slash revenue, or what would you call that?
As I would call it revenue.
Yeah,
That's what I think that's how I would call it, but it's just basically money coming in, isn't it?
yeah,
All your money coming in is
yeah.
revenue, is your
And
income.
yeah, so this refers to the income of the business that you make from selling goods. The income statement shows the revenue made over a certain period. Example, the income slash revenue of Apple, the big company Apple,
Yeah.
would be all the money Apple has made selling iPhones, iPads, AirPods, MacBooks, and all their accessories. So their income
Yeah.
revenue, not venue, it's massive.
Yeah. So and also, I mean, so this is when you do it in like that people do it monthly, people do it quarterly, people do it
Mm,
yearly. They'll look at it like that. Um,
yeah.
Another one that I got confused about and I double checked this is when people talk about turnover.
Mm,
Actual turnover. But actually, I looked at turnover up, and it's actually how often you turn over the stock holding and money in your business. So I've been using it incorrectly. I thought
right.
turnover was the same as income and revenue. It's not. So I
Oh,
will stop using that from now on.
yeah.
Mm.
Yes. Because it's handy when you say apply for a loan or something like that, knowing this terminology
Yeah.
as well.
Yeah.
Because they do ask you, what's your gross profit? What's your
Yeah.
yeah.
Yeah, exactly. So yeah, if someone asks for your turnover, that's how often things get turned over in your
Mm,
business. But income is literally all the money coming in. And say some people look at it monthly, some people look at it weekly, some people look at it daily.
yeah.
Um, and
I
quite
look at
often,
mine quite daily.
yeah, yeah.
That's
And I
because I
also
do my accounts every day.
oh, look at that halo. But I know when I worked for the shoe company, when I worked for Freed, it was the each sales team, so UK sales and overseas sales, and I think that we had retail as well. They all had budgets that they had to hit, and these were targets, and they were
Yeah,
income, and it was actually the income. So it was quite interesting that they would say that it had a monthly target of or UK sales have a monthly target of 2 million, say that had been set at the beginning of the year, and it had been based on last year's income
yeah,
plus a price increase. So, and that was quite a good thing that they all like were driving towards that
yeah,
budget, which was an actual income. It didn't have any cost
yeah,
taken out or nothing. That was how much money was coming in
yeah.
from them.
And I like to use those monthly figures so that I can work out what I made last year and
Yeah,
what I made this year. So,
yeah,
but I've
and
only
yeah,
just recently started doing that.
I think
I've
comparing between years is really useful.
yeah,
If you're doing better, if you're doing worse, what
yeah,
has gone wrong, what has been different, and things like Easter and things like that. When they get thrown in at different times, it's really useful that if you sit there and go, "Oh, my March has been rubbish this year,"
yeah.
and then you
And you
realise
kind of can
actually
see
Easter was in the
why.
middle of March last. You know what I mean? It's
Yeah,
things like that. Keeping all that kind of
yeah.
information is quite handy.
Yes.
Hmm.
So the next thing that was in my bake diary was
Mhm.
cost of sales or expenses. They kind of put it all in together. And
Yeah,
this includes all the costs that a company incurs in the process of producing goods and services. These costs could include salaries that are paid, raw materials, building, maintenance, and your council tax, things like
see,
that.
it's funny that I don't see that I see cost of sales to be different. Isn't that funny?
Oh,
So, I see. So you've got two lots of costs. You've got fixed costs, which are your overheads, which are your mortgage, your rent, all the things that are going to stay the same no matter how much you produce.
mm,
They're all going to be the same. So if you've got, I don't know, your phone bill, your broadband, They're never going to change. No matter whether you make 1 cake or 50 cakes, they're always going to be the same. So that's like a fixed cost or an overhead.
Mm-hmm.
To me, cost of sales is a variable that is your ingredient. So if you make 1 cake, it's going to cost you that much. If you make 50 cakes, it's going to cost you more. So to me, that's what cost of sales are. So it's an actual direct cost of how much you're selling, whereas the others are a fixed overhead.
Yeah.
They're
And
all
you
expenses, and they're all different expenses, but some are variable and will change no matter how much you, depending on how much you make. Some are never ever going to change because it's just fixed.
Yeah. Okay.
that's just how I've always seen it.
Yeah.
And when we had the shop, I used to have to go through every month all our expenses. And I used to go, oh, I've bought these boxes. Where did they go under? And George would go, cost of sales. And it's like, oh, okay. And then it'd be like, oh, I got the broadband bill. Where's that going? Well, that's an overhead. So that's why, in my head, that's how why they're different. Because
see, the reason I've said that is because when I go into Bake Diary, and I put in expenses, I've got a section, and I go into expenses. I add my expense, and I have to say whether it's an ingredient,
right,
rent, and it's all separated out for me. So that's why I've said it like that.
yeah.
But yes, yours does make sense.
Well, I imagine that therefore they've got something in there in the diary that works it out for you then.
Yeah.
But to me, a cost of sale is a direct cost.
Yeah.
So if you don't make that sale, you haven't got that cost.
No.
Whereas the others are overheads because they're there all the time and you haven't got, there's no flexibility there.
Okay.
Right.
Gross profit.
Gross.
Are
Such
you
a
ready?
nasty word, isn't it?
It is. It is.
Right,
okay. Hopefully I've got this right. Basically, whatever money is left after production costs is known as gross profit. Is that right?
So I've got gross profit is your profit minus the cost of sales.
Yeah. So I've actually written this down here. Gross profit equals revenue minus cost of sales.
Yeah. What, you just called it something else as well then?
Gross profit.
No, the cost of sales.
Expenses.
No, there was something you said another word. Read it all again.
Gross profit equals revenue, which is your income revenue.
Yeah.
Minus cost of sales.
No, you said something else.
Did I?
Yeah.
You have to listen back to it in the edit.
Yeah.
Because I can't remember.
So gross profit is all your money in minus how much you spent to produce that one thing.
So I've actually written how to calculate gross profit. Do you want to hear it?
Put it all into a computer and hope it does it for you.
Yeah. It costs, well, I've written it costs you £55 to make a cake. You then sell this for £100. So your gross profit is £100 minus £55, leaving you £45 gross profit.
Yes.
Yeah.
Right. We haven't talked about wages or anything here. This is just actual physical material costs that we're talking about now. So yeah. Yeah.
Okay.
Okay.
And some people prefer to work this out as a percentage of sales, which can be referred as gross profit margin. And I've got in brackets GP percent.
Right. So when I worked at the shoe factory, part of my job was to work out margins. Okay. So we had a manufacturing cost, which was our cost of sales. We then had, for wholesale, we had to add a 30%. And then for retail, we had to add an additional 50%. So I had to work all those out because that's the way that, because it's such a big business. Do you know what I mean? Because it had so many like moving parts. Whereas in our little cake businesses, it's just us and and we know everything really close. Whereas when you're working for like a big business, it's like a big factory, and then they're having to sell, and then they've got 3 different sales channels and all that. So we had to have different margins. So everything had to. So there was a spreadsheet that the factory managers would work out the costings, and they would give me the cost, and then I would have to add the percentage margins to make the prices. And sometimes you had to tweak them, because sometimes you'd go, we're never going to sell a pair of shoes for that much money. Are you willing to take a lower margin on that?
So sometimes you do that sometimes with a cake though, don't you?
Yeah. If you really want to make the cake and you want that in your portfolio.
Yeah. Okay. All right. I feel like I've turned too many pages.
I feel like I've done a marathon already. We've only done 15 minutes. And isn't it funny that I didn't think, until we've started chatting, I didn't really register how much this was related to what I've done in previous jobs.
Yeah.
It's not registered to me.
I've used it before. I used to be an invoicing clerk.
Yeah.
Back in the day. And I used all of this kind of to work out things.
And then it suddenly becomes your own. And all of that back then, it was like, oh yeah, you just had 30% for wholesale, and then another 50%. And it just all seemed really sensible. But now in my own business, it's like, it's scary, but it's kind of not really.
No. Don't be scared of the prices. Right. So I've written also, should I talk about the gross profit margins?
Yes, go on.
Whilst we're on gross profit.
Yeah.
So what is a good gross profit margin? So when I was researching this, I put in like, what's a good...
Sorry, go on.
Do you need to get it?
No, I'm just going to press pause. Hold on a second. Okay.
So what is a good gross profit margin? So when I was looking this up, I put in, what is a good gross profit margin in a business? But it just didn't come up with anything that was viable. So I got 50% in retail. But I think going by what we were discussing before we started, that anything between 40% and 60% is a good gross profit margin in cake businesses.
Yeah, I think so. It's funny you should say 50%, because going back to Freed, when I was at Freed, we would sell at wholesale, and we would know that whatever we sold, so we would sell, say to a shop, so we were selling a pair of ballet shoes to a shop, and we would charge £5 for those ballet shoes. We would know that the shop would sell them for £10. They would double the price every single time. So they would always put that same margin on.
Yeah.
So for retail, 50%, absolutely bang on, straight down the line.
Yeah.
So, but when we were chatting earlier, we were saying, what are our margins? And I think somewhere between 50 and 60, 40 and 60. And if you get a higher profit margin, well, hey, lucky you.
Yeah.
If you get a lower one, don't beat yourself up. You've still got a profit margin. Just make sure you're paying yourself enough.
Yeah. And make sure your net profit margin covers this. So
go on then. What's your net profit?
What is a good net profit margin?
What is net profit?
So net profit is oh no, I've stumped myself here. Here we go. We haven't covered this yet.
We haven't done net profit yet. We've done gross profit. What's net? What's the difference between gross and net?
We're gonna carry on with what is net income, also known as net profit, and then I'll ask that question.
Okay. Go on then.
That makes it a lot simpler. So our next category is net income, also known as net profit. So net income refers to the amount an individual or business makes after deducting costs, allowances, and taxes.
Yeah. So after everything has come off.
Yes.
Everything has been taken off. That is your net profit. That is what you're left holding after you've taken so if you are in a position that you're paying tax,
make sure you
take the tax off.
And put it in a little pot and don't touch it.
Yeah. Yeah, I do put money aside for tax. Everything that comes in, I put it in a little pot. because there's nothing worse than the thought of suddenly getting a tax bill and going,
Oh my
I've got
God.
no money.
Yeah.
So net profit is once everything has been taken off.
Yeah.
That is net profit.
And then what is a good net profit margin? So 10% is an average figure.
See, that seems so low.
But a good goal to set is 20%.
Right. See, even that seems, because that, I mean, we're talking about that. This is your wages. Your net profit is effectively your wages, isn't it?
Yeah. Yeah.
And this is where we went to between 40 and 60 earlier, actually. Our net profit we were talking about before we came on the podcast was the 40 to 60.
Oh, so I thought that was gross profit.
No. See, we did try to talk about this before we came on.
So when I went onto all my stocks and shares markets and I was checking out their gross profit and their net profit, their gross profit was huge.
Yeah.
And their net profits were always the little tiny ones.
Yeah.
So
because
that
they've
it
got
makes
big
sense.
corporate taxes to pay. They've got big overheads, big wage bills.
Yeah.
Because you've got to think their net profit is also after paying wages. Yeah. Okay, right. So you are right. 10% is right.
Yeah.
Sorry, it just clicked. So
yeah, I was just rereading my notes when I was going, oh.
Right, so net profit. So your gross profit. Oh, see, this is where people come really unstuck, and this is where I've just come really unstuck talking about it. Your gross profit is what your wages have got to come out of. Yes. But it's not your wages, because it also includes your taxes and any profit you're going to leave in your business.
Yeah. So your net profit is the amount.
Is what you're leaving in your business.
Yeah, you've got left after deducting costs, allowances, and taxes.
Yeah. See, I leave 5% in my business. So I take every penny that comes in, I take 5% off of that and put it in a pot. And that is for things like a new oven.
Yes.
If the mixer blows up, that's what your 5% net profit is. Yeah. So that bit in the middle between gross profit and net profit is your wages and your tax.
Mm-hmm. Yes. Yes,
and that makes sense, and that's why it makes sense for 40 to 60%. Right? Okay. Yeah. I'll just unravel everything I just said earlier, and that's fine.
Okay.
Right. Should we go over that again? Should we just to reiterate that?
Okay. So gross profit. I've got to go back a page.
So gross profit is your income.
Basically, whatever money is left after production costs. And everything that's known as gross profit.
And then from your gross profit, you take your wages and your tax. Yeah. And what is left is your net profit, which you keep in the business, which 5 to 10%, bish bash bosh, wonderful.
Yeah, yeah. And that makes your business a good business. Excuse me. I'll cough as well. Double coughing.
Oh, right. Okay. Oh.
Okay.
All a bit excited then.
Yeah.
All a bit excited.
So for me, the rest of what we've got written. Sorry, I want to cough now. I'm copying you.
Allergies. That's what it is. Yeah. It's allergic to numbers.
So for me, what we've got written to talk about is a lot easier than the gross profit and the net profit.
Yeah.
So
gross profit is the money coming in, taking all your costs. Then you take off your wages and your tax, and you're left with your net profit, which you leave in your business for when things blow up, or if you want to go on training courses, that sort of thing.
Yeah. Yeah. And to make your business look amazing.
Yeah.
As well.
To invest in your business.
Yeah. Yeah. Invest in you, really, because we're all mainly
we are our businesses.
Yeah.
Yeah.
I am. I've got one more in my belly. Anyway. The next one we want to talk about is cash flow.
Cash flow. Okay. Cash flow.
So this is the total amount of money being transferred into and out of a business.
Yeah. So, I really have got a frog in my throat. So sometimes you hear businesses talking about they have a cash flow problem,
Mm.
and it's not that they haven't made sales. So they've made
No.
sales, so they've had to pay to make those sales because their cost of
Mm.
sales have all been done, but
Mm.
their customers haven't paid
Yeah.
yet.
Yeah.
And that's when you get a cash flow problem. So that means you can't make the next batch of sales because you haven't had the money in for the first batch of
Yeah.
sales. To be honest, in our businesses, we shouldn't have that problem because
No. The I tend to get that when there's I'm waiting for wedding payments.
yeah, because it's generally we only start spending money when we've got the money in. But
Yeah.
yeah, when it comes to weddings, and it's like big chunky bits of money,
Yeah.
isn't it, that you're
Yeah.
waiting for, and you
Yeah.
get a cash flow problem. But it's
Or
not.
I tend to get that a lot with corporate as
Yes,
well
yeah, because
because
they don't always pay before, do they?
they'll
Yeah,
get their cakes and then they'll pay.
yeah,
And sometimes you'll get a company like I have one company and I know they have the money.
yeah,
They just
yeah.
take their time paying it.
Can you
So
remember, when we used
yes,
to supply the Greyhound?
company, yeah,
Oh, and I used to chase them and chase them and chase them, and I remember at one point there was like a couple of thousand, which for a small business
there's a lot of
is
money.
is a lot of, yeah, but for they were a small business as well, so they were obviously holding on to their money for as long as they could.
Their accountant was very good. That's all I
Yes,
will say.
yes. Yeah, you did have to really chase them down. But yeah, so
Mm,
that's when, if you've got a cash flow problem, it's because the money isn't coming in, but the money's going out. But it doesn't mean to say you're not making the sales,
mm,
because you might be making the sales, and that's fine.
yeah,
Just haven't
yeah,
been paid for them.
yeah. Okay, break even. The
Yeah,
break even point is the point at which total sales and total expenses are equal. Sorry, I can't
yeah,
read my writing. Meaning there is no loss or gain.
yeah. So it's the point that you're not making a profit, but you actually haven't lost money.
Hmm.
And it's times things like it's good to know your break even point when you do, like we were talking last week about, if you're doing a fairs and markets, and you get to the end of
Yeah,
the day and you've got stock left on your table,
yeah,
um, to bin it, you're making a loss.
yeah,
But if you sell it for the cost, you haven't lost anything. You haven't gained anything, but you've actually not made a loss. So it's good to know what your product's break even point are in cases like that.
yeah,
So you know that you
yeah.
can get rid of
That
and
you're
lower.
covered.
Yeah.
Yeah. And
And
you're
that's
not
why
gonna
a lot of times when you go to places like, when you get like yellow tickets at Marks and Spencer's or at supermarkets, things like that,
yeah,
that's usually their break even point.
yeah,
They go down to their break even point so they cover their costs on it.
yeah,
Um, and also sales, when people put 50% off, that's
yeah.
because
They just want to
they
get
just
rid of
want
this.
they want the room, but they don't want to make
Yeah,
a loss on it.
yeah. That's
Okay.
right. Okay. The next one I have is
Hmm.
capital assets. An asset with a useful life of longer than a year that is not intended for sale, like your cars,
Hmm.
your homes,
Your oven,
uh, your fridges,
your mixer.
the table you work at.
Yep. Yeah, they're all and they've all got a monetary value.
Yeah.
I mean, we could go into depreciation and stuff here, but I'm not that boring. Because like like
Yeah.
when you buy a car,
Yeah.
it's not going to be worth as much in the first year and then the second year, and
Yeah.
there's like you can do sums around that. Accountants can do sums around that
Yeah.
depreciation. But your assets are your things that if you suddenly stopped working, you could sell them
Yeah.
and you could get money for them. That is an
That's right.
asset.
Your tools and equipment, your flour cutters and that's covered under that as well, isn't it?
Yeah, yeah, basically anything that's got a monetary value
Yeah, your
that you could sell.
printer.
Yeah, definitely, definitely. And then your capital, so that's an asset, and then your capital is money.
Mm,
So if you've got money in the bank, that's capital.
mm,
It's cold hard cash. That's your
mm.
capital.
Yeah.
And another one that I actually found, I was looking up the other day because again I didn't realize I don't think I really, because like the same thing with turnover, I didn't realize the difference. What equity is. And equity is the amount that you own in your business. So I own 100% of my business because it's mine.
Mm.
And you know, when people go into Dragon's Den and we go, we'll let you have 20%
Yeah.
equity for 150. So that's an equity share. So
Mm.
that's what equity is. It's the ownership of your business.
Yeah.
Right.
So this is the last one on my list.
Okay.
Okay. So I've got invoice and pro forma.
Yeah. Because I don't think
So
everyone knows what a pro forma is in comparison to a
no.
normal invoice.
I think I might have. So I've written a preliminary. I can't say this word. Preliminary bill
Yes.
or estimated invoice, which is used to request a payment. So that's an invoice, isn't it?
That's a pro forma, isn't it?
Is it?
So
A
pro
pro
forma
forma.
is what you send before. So basically
Yeah.
what we mainly do actually, so we will send a pro forma invoice and want payment before we make a cake.
Yeah.
It can also be called an invoice, but the pro forma is when you definitely want money before
Yeah.
you give the goods. So a
Yeah.
pro forma is like a prepayment. So pro forma, I mean, to be honest, when I send an invoice, I expect it to be paid before I make the cake anyway.
Yeah.
But if you've got corporate clients, if you want the
Yeah.
corporate client to pay up
They
before
don't.
they
They
get the
don't.
cakes,
You have to actually specify massively
yeah,
that
and
is
you would
what
have
you
to
want.
send a
Yeah.
pro forma invoice, which actually specifically says you are not going to get your goods until you pay for this.
Yeah.
And that's
And
what
they
pro
say
forma is.
things like, "Oh, I didn't realise it said that on the invoice." So you have to make sure you specify to them.
Yeah. For
Definitely.
invoices, and then a receipt. Some people send an invoice as a receipt, but a receipt is the thing that you get after you've,
Yeah.
so like when you go to a shop, you get a receipt.
Yeah.
But sometimes when you buy online, you get an invoice and it's the same kind of thing.
Yeah. Baked Diary does that very well for you.
I also looked up VAT.
Oh yeah. Oh yes.
So in the UK, VAT is value added tax. I know so I think our VAT is 20%. Although on cakes, you don't pay VAT on cake. Because cake is seen as an essential.
It is.
And biscuits, you don't pay VAT on biscuits unless they're coated in chocolate, and then you do pay VAT on them.
Oh, that's interesting. It is 20%. I've just googled it.
Yeah, 20%. So have you heard of the Jaffa cake debate? Is Jaffa cake a cake or a biscuit?
Yeah.
And it was all to do with VAT.
Really? Oh, I didn't know
Yeah,
that.
it was all to do with VAT. So Jaffa cake, if anyone that doesn't know what Jaffa cake is, which rock have you been hiding under? But a Jaffa cake, so it's a bit of cake with a bit of jelly and a chocolate on the top. And they tried to charge VAT on it because they said it was a biscuit. Because it was a biscuit that had a chocolate coating.
Yeah.
And McVitie's went back and went, no, it's a cake.
Yeah.
So therefore we don't want to charge VAT on it.
Yes.
And so that's the difference. But if you have a business and you have a taxable turnover of 90,000 or more, you have to be registered for VAT. Yeah. Whether your goods are VATable or not makes absolutely no difference. So if you make over £90,000 turnover from your cakes per year, you have to be registered for VAT, and then you have to do VAT returns, I think every quarter. But what that does mean is that if you're buying equipment such as a new cooker, you can claim the VAT back.
Yeah.
I don't know how many cake makers will be making over £90,000 turnover a year, but just in case you are, please be aware you do have to be registered for VAT.
Yeah. Have you got any other ones?
I haven't. Oh, the other. So I had a couple of different bits. I had the difference between a sole trader and a limited company.
Oh yeah.
Because I used to be a Daisy Cake Company used to be a limited company.
Yeah.
And that means we had to. So right now I'm a sole trader, so I'm registered with HMRC which is in the UK our tax. Her Majesty's, I
His
did look at that.
His
His
Majesty's now.
Majesty's Revenue and Customs.
Yeah.
So I'm registered as a sole trader, and that has certain implications of when you have to do your VAT returns, your tax returns. If you're a limited company, you have to do corporate tax returns, and they are different from the sole trader. I wouldn't recommend a limited company personally.
No.
But talk to an accountant if you think you want to be a limited company.
Yeah.
And that's it. That's all I've got.
Oh, I'm a lucky bunny.
Why?
I've got a coffee.
Someone bought you a cup.
Yeah.
Someone's come in with a cup. Oh, look at that. I finished my cup. That's why I was coughing earlier.
Thanks very much.
There was one other thing that I put on there was sunk costs, but I don't know.
Oh, yeah.
So sunk costs are money that you spent and you can't ever get back. So
yeah.
For example, we did my garage, and so the cake room that I'm sitting in is a sunk cost. I can't ever sell it because it's part of the house.
Yeah.
But it's a sunk cost into my business that I can never get back.
Yeah.
And that's it. I think that is it now. I'm going to shut the book because I don't want to look at it anymore.
I shut mine as well. But I am glad we have done this because I really felt that this is something that, especially in our schools, we're not taught these sort of things.
No,
and
we're not.
If you don't
we're taught
really
algebra, but we're not taught anything about gross profit and net profit.
Which I think is quite important.
Yeah, so, I think it's very important.
I'm more knowledgeable now than I was yesterday. So, and I have listened to podcasts about this, like over the last few weeks, and it's just like they go, bah, 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 bah. So, but
what was that you sounded like? Was it Charlie Brown?
Yeah, from Peanuts.
Oh, wow.
That's the teacher, isn't it, or the parents when they phone up? Anyway, we're going to dive straight into product of the week.
Oh, this is more fun.
Yes. So it's actually your turn to go first.
Is it my turn? Yeah. Right. I don't have a product as such. I have a person to follow on Instagram.
I'll get my phone
but
out
she does
ready.
have products, but unless you're in America, you ain't going to be able to buy them, which is really sad because I really want to buy them. So it's someone that I follow on Instagram that I have been very much inspired by. Called The Pink Crumb. Double B at the end.
I think I follow her already. The Pink.
She's called Tiffany, and she has a cart. She has a cake cart.
I do follow her.
So she has this cake cart, which is kind of where I was inspired to do my cake shed. But she has a cake cart, and I just find what she says, like, it makes a lot of sense.
Yeah, and it's all for small businesses, isn't it?
Yeah. And she talks about, she said, she talks about what happened when she got to the point that she literally couldn't bake anymore to make any more money. So how could she increase her product? How could she increase her income? And her revenue and her gross profit in it. So, and then she said, well, then I had to start changing some of my products in my cart because I physically couldn't bake anymore. So I couldn't increase my hourly rate. And yes, so she's very honest. She has got a little, she's got a membership called the Pink Program or something like that, which I think is $4.99 a month. But it is very American centric. So she talks about cottage laws, which we don't, it's like she talks about selling in America. But some of the things she says on there, makes a lot of sense. And I say that's $4.99 a month. But yeah, I like Tiffany a lot.
Yes, I do follow her, and I do watch her videos occasionally. Okay, so my product of the week, because I've been banging on about it all the time, is Bake Diary. I pay £6.06 a month. It comes out.
That's nuts, isn't it?
Yeah, considering on the the previous accounting thing I was using, which I mentioned earlier, cash flow, I was
Yeah.
paying 22, 23
Yeah. See,
pounds
I
a
think
month.
I paid with QuickBooks because I used to have there were like different levels on QuickBooks.
Yes, that's right.
Yeah, and
So
when I
like
had the
bronze,
sole
gold, and silver.
yeah. So when I had
Silver.
the sole, because I had when we had the limited company and I had staff and I had to do payroll, I was
Yeah,
on one level, and then but the lowest level on
yeah,
QuickBooks was still something like 20 quid a month.
yeah, yeah. So I love Bake Diary. It does your invoices for you. It does you can just enter your expenses, your
Yeah.
mileage. It works out the prices of cakes for you. It can have your recipes on it.
So you put all your ingredients on and your recipes, and then it'll work out the cost.
Yeah,
Yeah.
yeah. And then every now and then you just need to go in and update your prices. I know I don't use it to its full capacity,
Yeah.
but it's
But
like
do you not find, like, all of these things, they've all got so much more than
yeah,
you could
but
use?
it's really simple. I do use the majority of them.
Mhm.
I'm just gonna open. I had it open so that I could click on it. I'm not going to now in case I fudge up what we're doing. But it's got you can draw pictures on it as well. You can do templates
Oh,
of cakes. It's got flowers and things on there that you
wow.
can put on. You can do the invoicing. You can do pro formas. You can do quotations. I find it really simple. It has a customer base. You can pay your bank. I can't do it, but you can link your bank and Bake Diary. But I
Oh,
didn't want to
okay.
pay the £5 charges on my business
Right.
account
Okay.
because I'm making money, and you don't make money.
Too many
So
costs means your profit's gonna go down.
that's right. So I highly rate it. I really do.
Yeah.
And oh, and it does all your it does your net profit and your
That's just
sales
I
and
didn't
it's
realise
monthly
it was so
figure.
cheap. I didn't realise it was
Yeah.
just £6 a month.
And then you can also do it's got graphs on it so you can see how much money you've made.
Wow.
It's yeah. I
So
highly recommend.
how long did it take to you to set it up with all your
Well,
recipes and things?
to start off with, I just did a little bit here and a little bit there. I started off
Right.
with the invoices. It's got my logo on there. You can
Yeah.
also add photos. If I don't like to, because I like the the customer to see my image. But
Yeah.
sometimes they send in a picture,
Yeah.
and you can add it to that your invoice that you're sending out. So I did the invoices bit first, and that was all I used for a while. And then I added Christmas cakes, and then the recipes and prices. So I
Right.
do a little bit here,
Yeah.
there, and everywhere. So I didn't have it all set up immediately, but I'd say within the year.
Right.
And I
Just as
do,
and when you've needed it, you've
yeah,
added bits to it.
yeah, and I do tend to go in, and it works out loads for you. It's really simple, it's really easy, and
It's designed for bakers.
yeah, yeah,
That's what we need.
yeah.
We
And
need
I
things
know
designed
someone
for
who
us.
was using it and they weren't a baker
Oh,
because they were just using like the invoicing and the expenses and stuff like that
because
because
it was cheaper than a regular accounting package, I
yeah, and
imagine.
it does everything you need, but really simply. And the fact that you can put your customers in it as well, and you can send out
Yeah.
emails, I think, and stuff like that, but I don't do that.
Oh, very
So
nice.
I have had it as product of the week before, but I felt because of
It
what we were
it made
talking
sense.
about, yeah,
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 it
and I
completely
used
made sense.
it to write my notes as well. So I highly recommend it.
Excellent. Right, so
Okay.
we hope we have been of some help, except for the minute of confusion in the middle
Yeah,
when we didn't know what the difference was between gross profit and net
we
profit, but
had
now
a
we do, and we
we
hope
had a
you do
small
too.
brain fug.
We're bakers, we don't do this tut.
No, no, no. So, but well, we covered it, and
Yeah.
hopefully we've helped.
Yeah, I mean,
But
I actually have, and I know you have in your bank, so I've got a bank account which has got different little spaces, and and I put money
I've
here
got
for
pots
tax.
on mine. I
Yeah, so
think
I've
it's
got spaces, you've
becoming
got
more
pots.
common because I did have a
Yeah.
conversation with my niece yesterday, and she's with GSB, and she said the same thing. She said, "Oh, I've
Oh,
got these
okay.
little pots and things now."
Yeah.
So And
So you put money aside. So, I mean, I personally, so as money comes in, I put 60% aside for my wages. I put 5% aside for my tax. I put 5% aside for my profit. I leave 30% in my main account for like all my expenses and my costs. And then every month I pay myself out of my wages pot. So I
yeah,
don't spend the whole lot. I pay it
yeah,
gradually, so it evens it out.
yeah.
I know other people do it differently, but it's
I
worth
think it's
putting money
what
away.
suits you, but as
Yeah.
long as you're putting money away,
Yeah.
and you're not in the red, you're always in the black.
Yes. Yeah. Yeah. As long as you're paying yourself and you've got money for disaster.
Excuse me.
Do you know what? What with me coughing, you
Yeah.
sneezing. I think it's allergies. I think it's just allergies.
Yeah. It's allergies.
It's allergies. I think I've got over my actual cough, but this is just,
Yeah.
yeah.
Yeah. Right.
Right.
I think I'm happy. I hope you
Are
all
you?
out there, yes. Please make sure you like, subscribe, dance, um, add a review, because reviews are always helpful
They
and
are
will
always
let other
helpful.
people know about us.
Message
Uh,
us, chat to
yeah, if you
us,
have any
whatever you need to.
questions,
Yeah.
and I know we've got some good guests come. I know two definitely have booked good guests. I'm just waiting
Love
for
a good guest. And
confirmation on
actually,
one of them.
while we were talking then, another one of the guests was buzzing on my phone. So fingers crossed.
Oh, so yeah.
Fingers crossed.
All right.
And we will see.
Yeah.
Right.
Take
See you next
care
time then, I guess.
and bye 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 bye.